Good afternoon, everyone, and welcome to today's webinar from the Institute of Export and International Trade on Customs Solutions for Exports to the EU, a session we're running in partnership with Groupe BBL. My name is William Barnes-Graham, the Executive Editor at the Institute, and I'm delighted to be bringing you today's webinar. And indeed, the topic of trade with the EU continues to be a significant one, with exports to the bloc still below pre-pandemic levels. Indeed, ONS figures in March showed that exports to Europe were down 1.3% in the 3 months leading up to January 2024. So today's webinar will hopefully give businesses some practical customs tips to address this decline. To begin with, though, on the next slide, it is my delight to introduce our excellent panel of speakers for today. I'm delighted to be joined again by the Institute's Customs and Trade consultant, Samantha Hodgkins. Sam has over a decade's experience working within trade in the aerospace and defence industries, and she specialises in export controls, customs compliance, Incoterms, and commodity codes. Sam is joined by two speakers from Groupe BBL. Gareth Godber is the head of UK for Groupe BBL with over 15 years of comprehensive experience in the import-export industry, supporting businesses and simplifying the international trade processes. His expertise encompasses customs regulations, logistics management, and strategic cross-border trade planning. And last but not least, Richard Maher is the head of UK Commercial at Groupe BBL. Richard also has an extensive operational background spanning over 17 years in the logistics industry. A brilliant panel, I hope you all agree. But before we get into the presentations, on the next slide, we're going to run a quick poll to find out a little bit more about you, our audience. So we're here gauging which of the following describes your exports to the EU. So potentially your exports have grown since 2020, since the pandemic. Your exports may have remained the same, they may have shrunk, you may have stopped exporting completely to the EU, or maybe you've never exported to the bloc before. I'll give you a few seconds to answer that poll, but before we get, as you do, we're just going to do some quick housekeeping notes. Firstly, you can contact me with any comments or questions using the question panel, which is usually on the control window that's to the right-hand side of your screen. We hope to get to a number of your questions today, though please note we cannot guarantee we will get to every question in the allocated time. As such, I will be prioritizing questions that are relevant to the wider audience, so I won't be going into company or sector-specific queries as such. Please also note that if your questions are short and clear, I am more likely to be able to read them. Finally, you will receive a recording of the webinar and a follow-up email we will be sending over the next day or so. So I'll just give you a couple more seconds to answer that poll. Thank you everyone who's answered so far. And let's see the results. So promisingly, no one stopped exporting to the EU, and only 6% of you have had never exported to the bloc. Actually, quite a few people have had their exports grow well over a third, 38%. Around a third have remained the same. A fifth of you have seen a shrinkage rate since 2020. So a quite mixed response there. And Sam, if I could bring you in at this point, is that a surprise at all, that response to the poll from the audience?
It is surprising, basically because you hear a lot in the news about how exports to the EU are shrinking. So that's really good. It's really good to see that we have core businesses that are indeed expanding their exports into the EU. We now just need to get new businesses exporting in the same way.
Absolutely agree. Well, thank you, Sam, and thank you everyone for responding. A really interesting response there. But on the next slide, at this point, I'm going to hand over to Sam, who's going to give a quick recap of the changes to the rules for exports to the EU since Brexit, and also to give some practical tips for how you can navigate these new customs processes. Over to you, Sam.
Thanks, Will. Next slide, please. As you can see, we are going to go through 4 points today. First of all is the changes since we've left the EU. SPS requirements, Incoterms and customs special procedures and authorisations that your company may be able to benefit from. Next, please. So, what has changed since we left the EU? Well, the exports the shipments that you send to the EU now have to be treated in the same way as an export to any other part of the world. So customs declarations and additional documentation need to be provided. You may be liable for import duty and VAT on your export as it's imported into the EU. And your goods may require a specific license to ship depending on the nature of those goods. You'll also need to obtain proof that your goods have been exported. Otherwise, you may be liable for VAT on those goods because they are usually VAT exempt because they're an export. But if you can't prove that, then VAT becomes chargeable because HMRC believe the goods are still within the UK. Next slide, please. So these are some of the changes that have occurred and things we need to take into consideration. The border target operating model, this is how the UK government see our borders and the procedures around them. So these are, this is the government's plan on how we look after our borders and any procedural changes that are going to happen. You've heard about single trade window, things like that. The next is the UK global tariff. So this is our own tariff system, allowing for some simplifications and reduced tariffs. As I've mentioned, we now need customs declarations for all exports. And guarantees and VAT, that's mainly affecting imports, though you will need, as I've mentioned, proof of exports to zero rate the VAT. Sanitary and phytosanitary measures, these tend to be the areas of most complication and where a lot of businesses run away from it because it can be extremely complicated. We have a difference in sanitary and phytosanitary measures, both for imports into the UK and imports into the EU. So they can be confusing and hard to keep up with because there is a difference between ourselves and the EU. We have the UK Global Scheme of Preference now that offers lower tariffs for poorer countries, and it doesn't have to be reciprocated. So the EU have something similar, but we now have it in our own right. We have safety and security declarations, and there are requirements for those have been waived until the end of October this year, fortunately. Transit, we've moved from the Union transit procedures to the common transit procedures. So we can still benefit from transit, it's just a slightly different process. And we have some differences in excise, but again, that is mainly for imports. Next slide, please. So both sides have successfully accomplished their shared objective of eliminating tariffs and quotas on all goods, which is a significant milestone in their trade relationship. This accomplishment sets a new benchmark for EU trade deals with third countries, ensuring that UK businesses, especially those in the agriculture and car manufacturing sectors, remain competitive without any additional taxes on their products. Furthermore, it will help UK consumers save on EU imports, making their purchases more affordable. This agreement is an excellent example of how both sides can work together to achieve a mutually beneficial outcome, which is a crucial aspect of any successful trade partnership. If you click on the link, it will take you through to the TCA. Some of it is product specific, rules of origin. The same with any trade agreement. There are specific rules for specific products. and processes and procedures. So have a look, get yourself familiarised with it, see what you can benefit from. Next slide, please. So you've heard me mention sanitary and phytosanitary measures. These are measures to protect the biosecurity of the UK, accounting for risks of contamination, disease and pests. This is one of the reasons why it's really important to know the origin of your goods, so that if they're coming from an area that has any problems, such as, dare I say, mad cow disease that affected UK beef, then you can take that into account. All these products require export health certificates, which confirm the goods meet health requirements of the destination country. Many of these are starting to become digital now, and there are exemptions for EU exports, such as cakes, confectionery, and some food supplements. Organic products get a lot of focus from authorities if mentioned on any documents, and they have a different set of requirements or considerations. You may need phytosanitary certificates for your goods. They're used for plants and fresh produce, processed plant products, and used farm machinery, basically for stuff stuck on the wheels, or cleanliness certificates to say it's been jet washed and cleaned, for example. So there are an awful lot of considerations that have to be taken into account. Next slide, please. So for your exports of those products to the EU, you will need to do a pre-notification submitted via the Traces system. Health certificate needs to accompany the goods, and your goods will need to enter the EU via an authorised location with a designated border control post. Documentary identity and physical checks at the EU border or inland facilities may occur, and there are quality and labelling requirements for fruit and veg. And as you can see, if you thought exporting to the EU may be difficult, if you deal with these products, it can be even more so. But like anything, it's about getting used to the systems that you use, having a good process in place, having the training in place within your company. Next slide, please. So this slide is just really for your information about products of animal origin. Just to simplify it down, you can see there that you'll need an export health certificate for live animals and fish, animal byproducts, products of animal origin, and composite food products, but there are some exemptions as listed there. Next slide, please. And again, in a similar fashion to the previous slide, this is in regards to certificates that you may need for plants or plant products. And again, we have the list of categories that you will need those certificates for and a list of the exemptions. Next slide, please. Moving on to Incoterms. In a trade transaction between a buyer and a seller, Incoterms establish the obligations. So who does what, who organises the carriage, who's responsible for the export paperwork or the import clearance, for example, and what about insurance. They set out the risk, so where and when the seller is considered to have delivered the goods, and the costs, who pays for what. The Incoterms are shortened to a 3-letter term when we use them, and along with their accompanying rules, they reflect trade practices for all types of goods and can be used for the movement of bulk cargo, containers, pallets and boxes. Everything is covered. So we've mentioned what they do. What don't they do? Well, they're not a substitute for a contract of sale. They are devised to reflect trade practices for all types of goods. They do not deal with the transfer of property, title or ownership. They do not detail remedies which can be sought for breach of contract. They don't cover the method, venue or law of dispute resolution. They don't cover whether there's a contract of sale or specification of the goods being sold, or the time, place, method or currency of payment. And they don't cover most consequences of delay, the effects of sanctions, or the imposition of tariffs, just who will pay them. So you need to make sure that you choose an Incoterm that works for you. Next slide, please. There are 11 Incoterms in total. Here you can see them. The 4 marked in green are for sea and waterways only. That means if you ship containerized shipments, you shouldn't be using one of these 4 because you've had to use a lorry to get your container to the port. These are only for sea and waterway shipments. You may already be familiar with some of these, and the 2 extremes tend to cause the most confusion and the most problems. So you have Ex Works, where you're not in control of the export, and you may find it difficult to getting that proof of export that I've already said you'll need, otherwise VAT can become payable. And DDP, deliver duty paid, and that is where you usually need a fiscal representative within the country that you're importing into, because you're responsible for any duties or VAT that is applicable. Fortunately, we have Groupe BBL on the webinar today, and they are going to talk about a fantastic solution. But I won't spoil their thunder. Next slide, please. This is a slide that you may have seen previously from ourselves. It just lists all of the Incoterms along with where the transfer of risk passes from the exporter to the importer, or from the buyer to the seller. It's a really good slide for a quick reference point. Next slide, please. Moving on to customs special procedures then. Special procedures allow you to delay, decrease, or even delete the duty obligations for importing or exporting goods. There are several different types of procedures that HMRC approve. There is one for storage, where goods can be brought into a customs warehouse. And we have the new addition of free ports around the country, so goods can be brought into a free zone and you defer payment of duty. We have temporary admission, and this is where certain types of goods are allowed in and then they get re-exported. So they are only in the UK for a short period of time. For example, exhibitions or musicians' equipment. Then we have authorised use, where customs allow you to import a raw material for an authorised purpose. Then there's inward and outward processing, and that allows goods to be brought in or sent out and processed without paying duties, and then re-exported or re-imported, or delayed payment of duty if the goods are then sold in the UK. Then we have transit, and this allows goods to move between customs zones without paying duty at the border. So you only have to give those clearance instructions at the very end of the journey rather than at each border crossing. Next slide, please. Moving on to some hints and tips then. Work with your freight forwarder. Build that relationship. For businesses new to exporting, that's the biggest tip I can give you. Think about using some smaller freight forwarders. You do tend to get more of a personal touch, and they will help you more with your queries. There is an additional cost to that, but it's about that personal relationship and you being able to pick up a phone and get help at the end of it. Think about upskilling the relevant employees. You need to think about who is involved in the export process or who will be involved. Make sure they're upskilled. Make sure they know the part they play in the export role. Have you thought about apprentices? The IOE have an apprenticeship scheme. So if you employ someone and you want to put them through an apprenticeship, look at the IOE. It's something that we do that can help you. You need to streamline your processes as much as possible. Don't make them any more difficult than they need to be. But you do need processes and procedures in place so that if for any reason the person who normally deals with exports is off, somebody else can pick up the process or procedure and can still do that role. So your exports will still happen compliantly. Look to the future. Webinars at the IOE, DEFRA if you deal with those kinds of goods, border target operating model. Keep your ear to the ground to find out what changes are coming down the line that you will need to react to. Everybody knew we were leaving the EU. Everybody knew, that was happening. The number of businesses who weren't prepared, that it came as a shock, that we then needed to import or export to the EU, whereas we didn't before. They were just dispatches or arrivals. So the earlier you can future-proof your business and get ready for any changes, the easier they'll be for you to adapt to. There is external support. We at the IOE offer online training, we offer Teams training, in-person training, we offer consultations, we have a helpline. There's also other external support. So HMRC will do schemes, and there's a variety of information available to you on gov.uk. It's down to you whether you research it and use it or not. But there is help out there. It doesn't have to be as scary as it seems. Next slide, please.
Terrific. Thank you, Sam. Great presentation there. I think some really useful solutions at the end as well. But yeah, really great overview of the new kind of trading landscape before exporting to the EU. Some really great tips around Incoterms and customs procedures as well, and some useful information for SBS goods as well. So thank you, Sam, for that presentation. We'll come back to you in a second for a couple of questions, but just a quick plug to say that if you would like to learn more deeply about how to optimize your trade with the EU and turn some of these customs processes into, some opportunities for your business, do definitely look at our e-learning course on navigating customs procedures and documentation. This digital course covers all the key areas of customs, helping your business learn how to make your exports and supply chains compliant, efficient, and profitable. It's a course that you can study and complete in your own time from anywhere in the world, as long as you have an internet connection. So do definitely consider this e-learning course as a great opportunity to reboot your exports to the EU. Indeed, I think it's in the next slide that we're going to just launch a quick poll just to give you the option to opt in for more information about this course if you so wish. Now, Sam, just as people are answering that poll, we've had some really good questions come in already from the audience. Thank you everyone for sending in these questions. Just one's come in from Simon to get things going. He's asked, would getting AEO support my business with its trade with the EU? So Sam, a question on AEO. And could you just explain a little bit maybe what AEO is?
Absolutely. So AEO is Authorised Economic Operator. There are two types of AEO schemes, one for security, AEOS, and one for customs, AEOC. And it's basically, at its core, it's a quality mark. It says that you meet the standards in regards to customs, you know, your documentation is correct, your processes and procedures are correct, you are a responsible exporter, you're a trusted trader. Now, as to whether, yes, having AEO would support your business with its trade within the EU and globally. You know, it's been found that if there are two shipments, one from an AEO business and one not, customs will investigate the non-AEO business shipment before they'll do the AEO shipment, because you have that level of trust. However, whether it works for your business or not really depends on the size of your business. AEO tends to be aimed at larger businesses only because of the time it takes to get AEO ready and to keep the AEO standards. You know, there's internal auditing requirements, lots of things which larger businesses tend to have the time and money to do. There are other trusted trader schemes coming in under the Border Target Operating Model that smaller businesses may be able to benefit from. So you do need to weigh up the cost of getting AEO over other trusted trader schemes.
Thank you, Simon. That's a great overview of AEO. Hopefully that's a useful solution potentially for Simon's business. So thank you for the question. We've had some really good questions come through on various different customs procedures. So we'll come to those later on in the webinar. But for now, just on the next slide, before we go into the next part of the webinar, just a quick reminder that the Institute does provide plenty of support for businesses that are new to exporting or even looking to enhance its existing exports, and that's beyond the training and the webinars already mentioned. So membership at the Institute gives you access to a range of benefits that help your businesses succeed overseas, whether that's exclusive guides and insights on trade trends and regulatory changes, access to our team of trade and customs experts via a technical helpline, or there's networking opportunities with fellow traders and trade professionals. I'll post some of the details from this slide in the chat shortly, but yeah, just another cheeky plug there. But for now, on the next slide, it's over to Richard Maher from Groupe BBL to talk through the logistical challenges businesses have faced in trade with the EU since Brexit, and to talk through some of Groupe BBL's solutions as well. So over to you, Richard.
Thanks, Will, and good afternoon, everyone. So probably quite a different take on how we export, because Groupe BBL actually help people import products into the EU through the import process. And just alluding to one of the things that Sam mentioned earlier about the Incoterms, DDP has proved quite a challenge post-Brexit. With all the years experience I've had of export and post-Brexit, DDP has certainly been quite a hot topic. But I wanted to take a look at some of the challenges that we've had, and more from a logistical background, to help customers kind of understand where some of the pinch points are, and that will probably help you better understand how DDP could potentially be the Incoterm of choice for you. So starting off with the challenges in the customs process. The customs process, as we've heard today, can be incredibly complex. But when we actually look at the physical flow and the document flow, under a DAP movement, which is where we saw the majority of exports moving post-Brexit, actually the import customs process doesn't begin until the goods arrive in the EU. So your logistics provider at that point in time would need to actually potentially open a financial account with the importer of record. They would also need to charge them the VAT, the duty, just the just the actual transfer of the contact details themselves proved quite difficult for a lot of the logistical providers, and therefore we saw additional delays in terms of your transit times, which again left a lot of the EU customers unhappy. The next topic is transit. So transit documents. Before Brexit, we were told there would be huge 21-mile queues in Dover, and then also on the other side in Calais. Everyone, because they didn't want to clear the goods at port, raised transit documents. Unfortunately, transit documents not the easiest thing to raise. They also have a timeout period, not just here in the UK, but also in the EU. So you also have, again, another minimum 2 hours worth of time wasted potentially. But the actual customs houses themselves in the EU, the waypoints as the logistics providers will refer to them as, didn't really upskill themselves. They were slightly understaffed and also very inflexible with when the trucks arrived. So I can give you many examples of customs houses that close on a half day on a Wednesday and a half day on a Friday, and that actually left a lot of trucks sitting still for long periods of time when actually they could be driving. Again, adding to the lead time of your deliveries, again, potentially adding to the cost with demurrage charges. And that is obviously was quite a big challenge for a lot of logistics providers. And I'm going to talk to you later today about some of the solutions around that. In terms of the financial implications, again, a lot of financial implications around VAT and duty, but more from actually the EU importer side. So your EU customers in this instance, again, not really wanting to have to account for VAT, not wanting to have to pay duty. We've actually meant that we've seen the market shrink within the EU. Starting to see that grow again now with the emergence of DDP, but we've definitely seen some shrinkage within the EU marketplace. And volumes have significantly dropped, as we do here in the media. So quite pleasing to see the results of the poll earlier today. So if we move on to the market, our market insights as essentially an EU import broker, certainly more education needed. And again, one of the reasons why we joined the Institute, because for us, obviously, the more education we can give to the UK market is imperative. And again, aim of the webinar today. But quite an interesting fact for 2 of our customers, at least in isolation, they've seen a 90% increase in the DDP Incoterm being used for exports on their new business. So the more education that we're giving to people about how to actually operate these solutions, the more increase we're starting to see, because we're mitigating a lot of the challenge that I've just spoke about. Who are our customers? Our customers are the top 10 logistics providers within the UK, within Europe, who all have European groupage, FTL, LTL, PTL services all across the EU. We actually work as their customs brokers to provide them with direct and indirect representation solutions, which facilitate their DDP offering to their clients. We will touch on direct and indirect representation in a moment, but we also work with a lot of customers who have potentially complex commodities. And again, as Samantha said, some of those would include product of animal origin, veterinary controlled goods. We can provide custom solutions for those. We have a vast infrastructure of customs houses within ports, all very strategically located, not just within France, but also within Ireland, within the Netherlands. And again, we support civet, DAFM controls within those areas. So we genuinely have staff on hand to support drivers to getting through those ports, present the right documentation. And again, all speaking the local language. I think one of the biggest advantages that we have as an EU import broker is actually that we now have the UK control tower, myself and Gareth. We're able to support customers in understanding the complexities when they actually arrive into the EU. Next slide, please. So direct representation, indirect representation in Regime 42, quite a complex topic, but essentially these are the ways that we can represent businesses, UK exporters. And if I just run through them quickly and then we talk about some of the features and benefits. So direct representation, this is for a company that has a French VAT number and actually an established EU entity. An EU entity anywhere within the EU, but also potentially a French entity. In that scenario, again, we can do import clearances into the EU on their behalf under a DAP Incoterm. From an indirect representation point of view, this is now a company who has a French VAT number, but they don't have an established EU entity. So it might sound very strange to some of you, but in terms of the way that the commercial invoice would look in this scenario is the exporter of record would be the UK business with the GB VAT number. The importer into the EU would actually also be the UK business, but with their French VAT number. And that's what actually makes this indirect. We're acting indirectly on their behalf. In this scenario, the actual duties can be billed back to the UK if they're applicable. Regime 42, lots heard about Regime 42 in the marketplace, a lot of myths within the marketplace as well around Regime 42 that we still try to quash every single day. But in this scenario, no EU VAT numbers required, no established EU entity, and we can do DDP except in France, or in fact, except into the country of import, because this has to be an intra-community supply. I won't go into the finer details of Regime 42 because it's a very complex regime. Essentially, you wouldn't be able to do a B2C delivery. Under Regime 42, we have to perform something called an intrastat declaration. So again, if I walk you through the invoice, on this invoice, the exporter record would be the UK exporter with their GB VAT number. The importer of record would be the UK business, again, but with my French VAT number or my global VAT number. We then perform an intrastat declaration from my global VAT number to the consignee's VAT number. Now, in both those scenarios, indirect and Regime 42, there is no VAT to pay. In fact, you can't pay VAT into France. There was a regulation called Auto Liquidation 2, which came out on the 1st of January 2022, which meant that all VAT in France was deferred upon import. So in terms of a cash flow, it's very beneficial to UK exporters to potentially use one of these regimes or have us act indirectly for them. Another key benefit within France is, in fact, you don't have to import the point of fiscal rep as you do in some of the other customs unions. If you have a French VAT number, you can do a VAT return by yourself. And we see many businesses that have multiple VAT numbers around the EU. Again, we speak to those businesses, they might be paying import VAT into Germany and Austria and other places. In fact, they've got a French VAT number, they can import all of their goods into France and just do a French VAT return. So I've probably made that sound quite simple, but there are some complexities that sit behind it. But yeah, it's definitely the way forward in terms of trying to grow your European volumes, because in all of these scenarios, actually your EU importer, the actual consignee, the buyer of those goods, will not need to face any import clearances. They will not need to account for any VAT or pay any VAT, sorry, and they also won't need to pay any duty. Next slide, please. So how do we do it? The solution's powered by Smart Border. You might be familiar with Smart Border, but if you're not, essentially what we do to mitigate that element of the lead time is we pre-lodge our import entry. So in fact, we actually do the import entry before it could be that your logistic provider has actually collected the goods. By way of doing that, actually, we provide what we refer to as an import barcode. That barcode is scanned when the truck arrives at Dover, just like they would scan a transit document. And actually on the ferry or on the train underneath the tunnel, there's actually TV screens which will use ANPR to recognise the truck and marry up the barcode. What you'll have, and you may have heard this referred to before, is a green light or an orange light scenario. And actually when you come off the tunnel or you come off the ferry in Calais, Dunkirk or any other ports, there's actually an orange lane on the floor. If you get a green lane, those goods are cleared into free circulation as soon as they hit EU soil and the goods can be delivered. No transit stop, no more import clearance required. If you get an orange lane, this means you have to present yourself for a customs check. Could be a paperwork check, could be a physical check, or obviously it could be phytosanitary goods, and actually they need to go into CBAM control. Again, we have people in the port area to support this, speaking local language, and again, we're within the actual boundaries of the port to support drivers in this scenario. Now, from a financial point of view, again, I've just said there is no VAT to pay, and duty, if applicable, can be billed back to the UK. The reason I mention this is because there's many businesses that we speak to and they say to us, all of our goods are UK origin. If they're UK origin, it makes almost no sense to me why you wouldn't ship on a DDP Incoterm. There is an element of risk, but as we saw in the slide that Samantha presented, the risk is only one step back from a DAP piece. So realistically, as there's no duty, there's no cash outlay, this solution is perfectly built for your commodities. Another hot topic at the moment is CBAM. This is the Carbon Border Adjustment Mechanism, and this is the EU Commission solution to avoid further carbon leakage. Now, it only applies to certain commodities. Those commodities, typically metals, chapter 72, 73, 76, also cement, fertilizer, and it will be extended to further commodities in the coming years. Now, the carbon border adjustment mechanism actually went live in October 31st this year, and actually the first 2 declarations should already be completed by businesses that ship those commodities. Now, a CBAM declaration has to be completed by the EU importer, but as we've just said, in an indirect representation model, there is no established EU importer. So in that scenario, as your indirect representative, we will complete the CBAM declarations on your behalf. We don't really have any competitors in this space, so we're speaking to many customers at the moment about completing their CBAM declarations. For now, relatively simple declaration, because actually the EU Commission has allowed us to enter some default values. In the future, you will need to provide information around carbon output of your commodities, dependent on their country of origin. So we were supporting customers in this space. If you do have any of those commodities, feel free to come and talk to us. And as I've alluded to earlier, we also support customers with the CHED documents. So these are the documents that are required when we're presenting with an EHC, as Samantha mentioned. And we also manage the CBAM control, also the DAFM control in Ireland. So if you are moving any goods of phytosanitary or veterinary control goods, then again, we can support you with completing CHEDs and manage the CBAM control for you. If you do want any more information, or you want to kind of book any appointments with us, if you can scan the QR code, feel free to select some time that you can spend with myself or Gareth, and we can support you further. But I'd like to thank you all for joining the webinar and thanking the Institute for inviting us along.
Thank you, Richard. Really interesting presentation there. Great to get kind of the perspective of an organisation like Groupe BBL, and also some really interesting solutions there as well. So a great presentation, thank you. If we go to the next slide, please, we'll just do another poll. Just your opportunity to say yes if you'd like to be contacted by Groupe BBL with more information about some of the things they were just presenting on just now. So a chance there to do that. We've had a few good questions come in from the audience. I'm going to put one to Gareth, also from Groupe BBL, who's joined us for the Q&A part of the webinar. Gareth, had a few questions in from Sylvia, who's just asking around DDP in general. So she asks, how can the exporter get the import VAT back if not registered at the importer's country for VAT purposes? And how does, I should just ask if you could say a bit more about how the risk passes from the exporter to the importer all the way through to the DDP named place, and how you ensure that compliance around DDP. So yeah, a few questions in there from Sylvia.
Definitely. Thank you, Will. And thank you, Sylvia, for the question. I think it all comes down to the particular regime in which is being utilised, Will, in all honesty. And one of the great benefits of having the UK Control Tower here is the fact that we like to communicate effectively with the UK exporters, going through their whole supply chain solution, looking at where it can be streamlined, what we can actually remove in terms of complexity. So as Richard explained, from a VAT perspective, due to the fact that we're exporting it utilising regime 42, there would be no import VAT due to auto liquidation 2. So a lot of questions we get asked are mainly using merchant websites and things like that, Amazon and so on and so forth. Do you need to be VAT registered in the country in which you're exporting to? There is certain benefits to that. The main answer is no, because you can leverage regime 42 and our French VAT number on clearance in France. If you are VAT registered in the country, then you can claim it back. If you're not VAT registered, as I said, there is no inbound VAT to pay through the UK to French movements anyway. So I think the biggest thing for myself is to look at it or look at each business's requirements individually and go through them specifically with that particular client. There isn't an off-the-shelf solution that's going to fit everybody. As much as I'd like to answer the question in its entirety, it's not as simple as that, unfortunately.
These things really are, but thank you, Gareth, for the answer. Hopefully that's answered a few of Sylvia's questions there. Let's close the poll, and on the next slide, you'll see we are into the Q&A. So please do feel free to ask any questions you may have. You have some really good questions already, and we'll go to questions on the floor now. So let's bring back Sam for a question, if you may. So question from Sarah around samples Sarah says, we're having issues getting samples into the EU, which we need in order to create an awareness of our products with new customers. What do we do?
I would suggest that she has a look at the processes. Do they ship the samples with a commercial invoice, clearly marking them as samples, but with a true reflected value? So whilst it's a sample and it has no commercial value, i.e. there's no sale taking place, it still has a value for customs, and that should be reflected on the commercial invoice. Have they marked the goods physically as samples or changed them in some way so that they cannot be resold? So cutting or marking clothing on the outside where it's clearly visible, for instance. If they do all of that, there should be no hold-ups.
Thank you, Sam. A question for Gareth or Richard is from Jane. Jane asks, is the easy clear solution only for exports from the UK, or does it support other shipments from countries like the US?
Rich, do you want to answer, or do you want me to?
No, I can answer that. Yeah, so Easy Clear essentially is just for the EU marketplace from the UK. So post-Brexit, the pinch point really was obviously for UK exporters trying to get into the EU with the new customs regulations. And that's what the solution is purpose-built. We can support customs clearance at other locations with pre-lodged entries. It'd be good to understand a little bit more detail what the requirement is.
Terrific. Hopefully that's helpful, Jane, and obviously Jane, do feel free to get in contact with guys if you want more information. Question from Caroline, does CBAM include exports of meat? My understanding it's more primary materials like steel and aluminium and stuff like that at the moment, but who wants to take that CBAM question? Gareth, do you want to? Richard?
Yeah, it is for exports at the moment. The UK will also be operating its own CBAM method from 2026, and obviously the commodities will be extended, but it is just for metals, fertiliser and cement at the moment, so anything that falls under those chapters. Again, we have some really nice material around CBAM in terms of what chapters are affected and what you're going to need to do to prepare to carry on exporting those commodities.
Thank you, Richard. Question from Erica around temporary admissions. I might put this to you, Sam, if that's all right. So she says, temporary admission into the UK, does this include machinery? How does this work when bringing in costly machinery for a short period of time? Do we need to pay a deposit to HMRC? So you just talk a little bit about temporary admission, Sam.
So temporary admission, you would need to check on gov.uk on the terms specifically over what type of machinery it is and what it's going to be used for, as to whether you will be able to benefit from temporary admission. In regards to any kind of guarantees, it depends on how well established your company is, to be fair, and in regards to imports and exports and financial history and financial history and things. So it does very much depend, but have a look on gov.uk. It will tell you about temporary admission and the benefits that you may be able to reap from it.
Thanks, Sam. We've had a question also from Tracy about re-exports. So if an EU origin goods are imported into a UK customs warehouse and are then re-exported back to the EU, can we enter the EU without EU duties? Sam, is that one you could cover? Just a re-exports question.
Okay. So in regards to re-entering into the EU, I thought you were going to make I thought it was going to be a question on origin, but in regards to duty, it depends on how it's going to be imported. I don't know if Gareth or Richard want to add anything, but it depends on how it's going to be imported. Is it going into free circulation in the EU? Are they taking advantage of any special procedures?
Absolutely agree, Samantha. We see numerous occasions where goods have temporarily come into the UK for fixing, or it's come somewhere, and it absolutely just depends on where the final destination is and is it going under any special procedure. 9 out of 10 times, if it's not, yes, duty will be applicable on re-entry into the EU.
Thank you both. Really great answer there. Let's do a question we've had in from Matthew, who says, we need a system where multiple packages from the UK can be sent to multiple recipients in multiple EU countries, but via a single EU entry point, and with the packages cleared into the EU through customs as a single shipment entry. How do we do this? So I guess it's sort of a
answer that, Richard.
Yeah, please do. Thank you.
Yeah. So is that, I suppose it would depend if it's a B2B or a B2C movement. If it's B2B, it's very simple. Actually, we can do a bulk clearance and we can put it into a place and obviously then ship out from there. That's no issue, as long as there's one export of record and one import of record. The only thing I'll say about that is regime 42, as we mentioned, wouldn't work, because ultimately you would need to have, as a bulk clearance as such, we would need to have the French VAT number. So as I said, you need one import of record, one export of record, but we see that being used very, very regularly within the marketplace, and we refer to it as a bulk clearance. So again, this could be 50 parcels on one pallet going to 50 different locations. You can do that as one export clearance, one import clearance, but again, you would need a French VAT number to be able to operate that method, and it would need to be for B2B, not B2C. There are ways around that, but again, very, very complex. Probably a 10-minute answer rather than a 30-second one, unfortunately.
Thank you, Gareth. Question in from Alti. Actually, we touched on CBAM, which I think is really interesting. So this is a good question. Alti, they ask, kind of, what impact will the EU's CBAM have on exports onto the continent? And it's a bit early stage, isn't it? Because it is reporting requirements at the moment. But how are you guys seeing it in terms of the impact of CBAM? What impact do you think it will have on exports?
Well, we've seen already a lot of the EU importers are trying to potentially change the Incoterms so that the CBAM requirement actually sticks with the UK exporter, which is obviously good news for us, because actually it moves from into a DDP shipment. I think, speaking completely freely about it, I don't think that people are taking it too seriously at the moment, because there's no kind of financial impact in terms of, you at some point in time you will need to buy a carbon quota. That comes into play in 2025. So there's a lot of people that almost have their head in the sand at the moment regarding these particular commodities, because there's not really been any impact. What I can tell you is within the next year, if you're not making your CBAM declarations, your goods will get stopped at port and they will be sent back to the UK if you're not down as making declarations. So really something that we're trying to spread the word about, and again, the reason why we put it into the presentation, because it's going to be imperative that CBAM declarations are completed. Will the landscape change from an EU Commission perspective and actually what they're asking for in terms of the level of data? Probably. At the moment, there's a 278 field file, which isn't quite 278 because it depends how you answer the questions, but I think there will be changes ahead, because a lot of the UK exporters will find it very, very difficult to get that information from source, because they potentially got these commodities from a reseller, not actually from origin in wherever they've actually got the goods from. So it's a very tricky topic, and as I said, the landscape is changing, but I think it will really change the way that obviously the EU will either purchase from the UK or potentially change the Incoterm, which that EU buyer wants to buy from the UK.
Well, I also think that Sam made a fantastic point at the very start of her presentation, that we all knew that we were leaving the single community, yeah, the EU. And with all due respect, it took the majority of UK businesses 12 months to get to grips with regards to the latest changes and the new regulations. And we're still now 3 years later, and we're still facing the same predicament as what we were 24, 48 months ago. Okay, this is not something that's new. It's been in play now for 6 months. We're actually just coming up to the second quarter declarations already, and as Richard alluded to, there is going to be financial repercussions for businesses that aren't actually declaring these CBAM goods. Are they implemented at this moment? No, but I can foresee them coming in, and someone's going to be made quite a large example of, and we're here educating businesses, especially UK exporters, where you are actually exporting your goods under DDP terms, that removes that responsibility and leaves a specialist like BBL that can complete those CBAM declarations on your behalf.
Yeah, the good news and perhaps the bad news is actually the default values become obsolete in the next quarter. So the likelihood is we'll find out much more about actually what data is required and actually what the impact is if you can't provide that data. If you can't provide the data, what are the repercussions? Because there's going to be an awful lot of businesses that can't provide their data. So a little bit of a strange time at the moment because we don't have all the answers, but very soon it should become clear.
And just to bring Sam in on this as well, I mean, it seems, as you mentioned at the top of the webinar, there's been a lot of change over the last few years. It's a very constantly evolving regulatory landscape, but it's not just because of Brexit, it is also changes on the EU side as well. So kind of what advice would you just give to businesses in terms of how to stay on top of all of this? Because there's just quite a lot of change going on, it seems.
We, as you know, send out daily emails, very much on the pulse of what's happening in the world of customs globally. It's all about getting that information, finding out what is going to impact you and your business, and educate yourselves. You need to get the information. Daily updates from gov.uk, that's a starter for everybody. I would be very surprised if any exporting business is not already subscribed. Those are daily updates from HMRC and the government. Just sign up to everything you can to get this information in so that you know the things that are going to affect you.
Can I add something on there?
Of course.
I think in your tips and hints part, Samantha, you said create long-lasting relationships with your logistics provider, and I can't say that enough. Okay, I think having a healthy relationship with a freight forwarder or a logistics provider will leaps and bounds you months in front of people that don't take that advice. Yes, it's 9 out of 10 times it's not free, and they'll only give that advice if you're booking your shipments with them. And I'm going to selflessly plug ourselves here, Will. Sorry, but being a UK control tower, English speaking, knowing and understanding the repercussions of these changes, regulations, we daily walk through 10 different businesses every day, walking them through their supply chain, looking at how we can streamline it and effectively improve cash flow, reducing costs, improving transit times, and removing the complexities for UK businesses. Yes, we do it free of charge, and we only do it in the hope that we can obviously start working and creating a long-lasting relationship with businesses as well. So if there is anybody that is in the actual chat at this moment in time that's looking for some free advice, a way to get some free updates and looking to streamline the business, we're more than happy. Feel free to reach out as well.
Terrific, thanks Gareth. At this point, we're going to have to start wrapping up, I'm afraid. So a big thank you to Sam, Richard and Gareth for the presentations earlier and for the answers to your questions just now as well. Some really interesting information there, and I hope that's been useful for everyone. Thank you as well to Groupe BBL for partnering with us on this webinar. On the next slide, you'll see some of our other upcoming webinars. Our next one is on key upcoming IT developments in UK customs, including CDS, NCTS5 and single trade window. That's on Wednesday next week. That's the 17th of April. And that's starting again at 2 p.m. That's going to be slightly longer than normal. That's going to run for 75 minutes to 3:15. The day after that is our next member exclusive lunchtime learning session, which will be on how to claim preferential tariffs using the EU-UK Trade and Cooperation Agreement. That's on Thursday, 18th April. And we've also got a couple of in-person events coming up this summer, including a regional event in Newcastle in May and our annual members conference, MemberCon, in Leeds in early July. For more information on all of these exciting opportunities, please go to export.org.uk/events. On the last slide, just a reminder, we will be sending the slides and the recording of today's webinar in a follow-up email, which you should get the next day or so. Please get in touch if for any reason this email doesn't come through to your main inbox. But thank you again, everyone, for joining us for today's webinar. And as you leave, please do let us know what you thought of today's session and any suggestions for future topics in future events by completing the short exit survey. But for now, bye-bye. Thanks, everyone.
Thank you,
Thanks.
everyone.